Hey everyone, Adam here from ReadFX. Today we're going to talk about Fibonacci. What is Fibonacci and how do you use it? Well, Fibonacci is a tool and when used in conjunction with a couple of other things can produce high reward and low risk trading opportunities. We're also going to go through the majority of people's introduction to Fibonacci and why they think that it doesn't work. But I wanted to begin with a lesson of why people don't know how to use it, why they can't use it, why it doesn't work for them. And that's because their introduction to Fibonacci is from a friend or on a forum. They've heard somebody talk about a particular level that price is magically drawn to and it just bounces off in the desired direction. But the truth is it doesn't actually quite work like that, and it doesn't come down to one particular level every single time. So what I thought we'd do is if we grab the trend line tool here, so we get the impulse leg up, what we want to do is go from swing low to swing high. So this is our Fibonacci retracement tool, and we've got the main Fibonacci levels of the 38.2, the 61.8 and the 78.6. Now what a lot of people are going to hear when they first start to trade Fibonacci ratios is that, for example, the 38.2 is the one. They heard that the 38.2 was the level to look out for. Price is drawn to it. As soon as it gets there, it bounces off. It's fantastic. So what will happen is people will see the impulse leg, they'll put the retracement tool on and they'll be waiting for that 38.2 level to be hit. The price will move down and they'll get there, start getting excited, enter into a trade, hoping that price is just going to make new structure highs and hit target levels. But the problem is, because price doesn't come down to one particular level every time, things like this start to happen. People will get excited, enter into a trade on 38.2, price bounces off of it, but instead price pushes past 38.2 and starts to head down towards the 61.8. And in the trader's mind, he's gone from a winning position, being into profit here, to a losing position, and we're just tanking down. So he gets out of that trade right there. Oh, the pain's too much. That 38.2 is not a strong level. It doesn't work. I don't know what that trader was talking about. I'm not trusting him again. Forget that. I'm gonna go to somebody else and find out how Fibonacci really works. And somebody else will tell him, no, 38.2, that's not the one, it's the 61.8. So he'll wait. Price will come down. 61.8, it will bounce up, and it'll do the same again. And he'll think, what is going on? What, these people are telling me that it works for them. 38.2 apparently worked amazingly well. Didn't work well for me there. The next trader told me it was a 61.8. Didn't work for me there. Did exactly the same thing. Bounced back down. Aha, must be the 78.6. Must be. I'll try that. Yes, I'll try that. And so, what does he do? He waits. He doesn't want to get caught on the 38.2. He doesn't want to get caught on the 61.8 because he knows that it has happened. It's happened. It's happened to him before. So I'm going to wait and get a better risk to reward here. I'm going to wait for the 78.6. But instead, price comes down. 38.2. Boom, goes off in his direction. Okay, the market didn't play out. I'm going to wait again for the 61.8. Then it goes down to 61.8. And we bounce up. And he's thinking, what in the world is happening here? Fibonacci does not work. Every time I enter a trade on a level that was supposed to be the level, nothing worked. I'm not using this again. And that is just because the trader does not understand how to use the Fibonacci tool and how to apply it properly. And the truth is, Fibonacci is very powerful when you use it in conjunction with one or two other things. And that main thing being structure. So let's go onto the chart and see how applying the Fibonacci tool can be powerful if you're looking for the right level. So if we use our starting point down here, you've got our impulse leg, swing low to swing high. We're going to add our Fibonacci retracement tool. And what did we notice? What are we looking for? If we know how to read price action, we'll know that our structure level is here. So what are we doing? What are we wanting to do here? We're wanting to wait for price to come down to this level. So we already know we're looking at this level and perhaps this level here. It's a zone. So we're looking in here somewhere. So if I clone, copy and paste that and put that there. So what do we do now? We've identified our structure level. We've got a Fibonacci tool on. What do? We wait for price action to come down to structure. Where is structure? Well, actually, It's not at the 38.2. It looks like it's going to come in at the minus 50% level. The 61.8 level comes a little bit low into this structure level here. So we've got that little bit of structure there coming right in on the 61.8. And it's a zone. It's not an exact level. The Fibonacci level doesn't have to align perfectly to the structure level. It's a zone that we're picking out. So if we remove a couple of things here, clean up the chart a little bit, we've identified that the 50% level pretty much came in at structure there, a little bit lower than 618. Price actually came down, bounced off of the just touched the 50% level there, moved up, came back down to test the 61.8 level again. And if we take the next impulse leg up, and then we add our Fibonacci tool, swing high to swing low, we put in a horizontal line for our structure level here. What do we see? Let me move that over so we can see that clearly. Drop it down a touch. Now, same again, what happens? We're waiting for our structure level, added our Fibonacci retracement tool. So now, doing that twice, you could say, wow, it looks like the 50% level is the one. And then you move on again, and we go impulse leg, swing low to swing high, reading price action, looking at identifying our structure level, adding our Fibonacci tool to predict where the market may get to, and yet again it happens to be the 50% level. So this 50% level is looking really strong at the moment. This is just 3 different impulse legs that happen to have come in to the 50% level. But the point is that we're lining it up with structure. And as soon as we've got a fib level lined up with structure, all of a sudden that becomes the powerful point that we're looking for. So it's very easy to understand how a trader could be using the Fibonacci tool, waiting for a particular Fibonacci level to be hit, and things not working out. But when you understand how to use the tool, and you're identifying structure levels, then applying the Fibonacci retracement tool, and seeing if you get a level line up, then it becomes powerful. Then you're using it in the correct way. Then there is confluence. Then there's reasons to enter the trades. That small difference, yet so powerful, and it works over and over again. Identify impulse legs, identify a structure level, add in your Fibonacci retracement tool, see if you get any particular levels line up, and it's a case of just practicing and getting used to using the Fibonacci retracement tool. So the truth is, the secret is Fibonacci works when you know how to use it. Go ahead and practice. Hope you enjoyed it.